Growth investing essentially involves buying stocks that are growing at an above average rate compared to other stocks in the market. So I want to discuss the advantages of growth investing. Number one, high return potentials. Uh, as a growth investor, there's a likelihood that you are going to actually add value to your investment because the growth stocks you are investing in have a tendency of growing at an essentially higher rate than what is obtainable in the market. And that level of growth will invariably guarantee you a form of compound growth in your investments. As your companies are growing in price, so is your investment going to grow as well. And so you stand to have an outsized gain, a compound growth, and a higher level of appreciation because of the rate at which your investment is growing. Number two, capital appreciation. Growth stocks are known to appreciate in value over time. But the fact that these stocks are gaining market shares, they are doing well fundamentally, they are expanding in the market, that will then lead to a higher rate of appreciation in the stock price, because generally stock price usually is a function of the company's fundamental. If the company is performing very well, the stock price will equally do the same. And so for the fact that the company fundamentals are doing strong, and that the profit coming in is remarkable, the stock price will follow suit. That will bring about a capital appreciation for an individual who adopts this particular um, investment strategy. Number three, innovation and market leadership. It is a fact that growth companies are known to be innovative. They tend to be market leaders in their industry because the rates of growth makes them to capture market shares from existing companies in a given sector. As that level of growth makes them market leaders, and it comes as a result of their innovative nature. So innovation brings about growth, and growth invariably leads to a higher stock price, and a higher stock price will translate to a bigger return for growth investors. And so growth investing, though it's kind of speculative, and it kind of somewhat risky compared to other strategies, and the fact that it brings higher return over time is worth considering. Number four, strong earning growth. Growth stocks are known to have higher earnings. Earnings here essentially means profits, and that would translate to a higher earning per share. When the company is profitable and you divide that level of profit by share outstanding, it gives the earning per share. So as the earning per share of the company is growing strongly, the share price would also grow strongly as a result. And growth investors owning these stocks with strong earning growth would benefit from this growth in form of capital appreciation, in form of compounding in their investments, in form of their stocks, doing very, very well when it comes to price appreciation, price increase. Number five, future potentials. Growth companies have future potentials because they are generally innovative. They focus on the future and bring in technology, bring in innovation that will guarantee them a place in the future. They are future minded, they have that particular long time horizon, and as they incorporate innovation, as they incorporate creativity into their products, into their services, you discover that these companies are future proof, and so they have future growth potentials. So you want to have a secured future, you want to have a guaranteed future investment performance. Is encouraging. It's encouraged that you invest in growth stocks. Number six, momentum investing. Growth stocks are known to possess momentum. Momentum here means a kind of short-term growth in stock price. This short-term growth in stock price will equally translate in a growth in the investment outcome of an investor, in the capital of an investor. So this momentum, sometimes it may be short term, sometimes it may be even a long term kind of process. And as your stock gains momentum in terms of price growth, price increase, an upward trend in price movement, invariably you are going to do well as a growth investor. Your overall investments will perform very well, will perform quite okay compared to the general markets. Number 7, early access to emerging technology. Our growth companies are known to be innovative, as I told us earlier, and as a growth investor, you have that opportunity of keying into a product that is just being introduced into the market, into a service that is just being introduced into the market. And as this service begin to gain acceptance, as these products begin to gain acceptance, in the overall market, as consumers begin to patronize these products at a higher at an expanded rate, you discover that the company's earning will increase, its profit will increase, and because you are an early buyer, in these growth stocks, you end up doing very, very well at the end of the day. And so you have that early access to a company that is doing well as a result of his innovation in technology, as a result of his introducing a technology to the market that tends to capture a bigger market share. And so as a growth investor, I would advise that you target companies that are bringing in products that will do very well in the market, that are introducing services that will be accepted by the general market. So as you enter very early, as you buy this company share very early in time, as the product does very well, you would end up doing well. Also, it's like investing in companies like Apple, like Tesla. These are growth companies that are known to introduce products that the market appreciates. So when you buy early, you equally benefit from that early entrance, uh, entrance in buying the company share. Number 8, diversification of growth sectors. When you buy growth companies, you tend to diversify, into other sectors that are showing a remarkable level of growth. And so, by the very fact that you are buying into other growth sectors in combination would guarantee, a level of diversification that will give you higher earning, higher price appreciation, higher value for your investment in the future. And so you diversify across different sectors, across different industries, and sometimes different regions that are showing a greater growth potentials. That will give you an outsized investment return at the end of the day. Please, I would solicit you, give me a thumbs up and also press the notification button and subscribe to this channel. Don't forget to share these contents. That will do me a ton of good and encourage me to keep on bringing to you this form of content. Number 9, high risk tolerance. High risk tolerance. Growth investing, I must emphasize, is risky compared to value investing and other forms of investment strategy. That is why you must possess a higher level of risk tolerance to be able to benefit from growth investing. And so growth investing actually, is there for you. We benefit you if you're the type that inherently, that naturally you can stomach risk, you can stomach market gyration and fluctuation. It will give you a higher return if you are naturally the type that have these particular attributes of risk taking in you as an investor. Number 10, long-term wealth building. Long-term wealth building. Over the long term, you discover that as a growth investor, and as the stocks you've invested in are growing appreciably over time, you will then come to realize a higher level of capital growth. Your stocks are going to compound at a higher rate compared to other conservative investment strategies. And so growth investing, guarantees wealth building on the long run if you can really stomach the risk inherent in it, because it is speculative by nature. But if you can stomach it, if you can endure, if you can bear over the long run, you are going to do considerably well compared to other investment strategies out there.